Yes, viewers, this is the part 2 of the video on how to prepare cash budget. In case you have not watched the part 1, kindly check the comment section of this video. The link to the part 1 is there. But if you have a foundation about cash budget, you can progress with this part 2 video. The part 1, the lesson there is more or less elementary, and the part 2, this lesson have little bit of technicality with regard to the purchases figure and some few other stuffs. So in the part 1 of the video, I explained the format and then the basic reasons behind the preparation of cash budget. But this part 2 is basically solving the second question. Question number 1 has been solved under the part 1. So now let's solve question number 2 with Abuba Limited. So with regard to Abuba Limited, we have the months here: January, February, March, April, and May. Then for each of the months, we have the sales figure, the salaries, taxation, and administrative expenses. Now, the additional information provided to support the above data, we have historically 70% of the sales are for cash, with the remaining 30% collected in the following month. Margin on sales is 20%. All purchases are on credit and are paid 2 months after the purchase. Selling and administrative expenses represent 5% of the monthly sales and are paid for in the same month it is incurred. The company, which was registered on 26th December 2021, used 12,000 of its issued ordinary shares to acquire office equipment on 31st December 2021. The equipment will be written off in 5 years. The closing balance in January was $2,000. The last one says the company's minimum cash balance is $2,000. Now, required, you are to prepare a cash budget for the 5 months period, January through May 2022. So we are looking at 5 months. Now, the technicality involved here is that in this particular question, the purchases figure has not been provided. Likewise, the opening balance for cash for January has also not been provided, but it has been technically provided. So we will then move to Excel and practically demonstrate how to solve this particular question on cash budget. So like I was saying, after getting your question, the first thing you need to do is to extract your data. The data, that is what has been put at this place of the question. That's the first part. This is what we normally refer to as the data. So we have the sales, the salaries, taxation. This is the data for each month. So we will progress to Excel and then write our data there, so that whatever we are doing, we will just be referring to the data and be doing it. So as you can see on the screen, in Excel here, I have my data for January, February, March, April, and May. All the figures are here, in exception of the purchases. The purchases figure has not been provided in the question. So the first thing we have to do now is to get our purchases figure. How do we get it? Let's go back to the question and look at something. Now, critically looking at the question, the first part says historically 70% of sales are for cash, with the remaining collected in the following month. That's for the sales. The next one says margin on sales is 20%. Here is where we are supposed to get our purchases figure from. Now, margin on sales is 20%. It means that for every sales generated, or for all the sales that have been made in each month, 80% is the purchases figure, and then 20% is the profit that the organization is making on the purchases. So the firm purchase the items and sell at a profit. Now the profit on each item is 20%. So, the profit on each sales is 20%. So for each sales figure, 20% of it is the profit, whilst the 80% represent the cost, which is the margin on sales. So that is where we are supposed to get our purchases figure from. So we will then move to our Excel. As we can see here, now we are going to calculate the 80% of each of the month's sales to get our purchases figure for each month. So I'll just use my Excel to get the 80% for each month. Yes, so 80% of each month's sales represent the purchases figure. So now we have the purchases. Now the next thing left is to move on to prepare our cash budget. As I've already introduced in the part 1 of this tutorial, under the cash receipt, the first item that have to come in is the cash sales. So I will then write my cash sales. Now cash sales simply means goods that you sold and receive the money instantly. So let's look at the question and remind ourselves about how the sales were made. So historically, 70% of sales are for cash, with the remaining 30% collected in the following month. So it means that 70% of each sale here is for cash, while the 30% is collected in the month following the sale. So what I will do here is to come back to my cash budget. Now I'm going to calculate 70% of each month's sales. All these ones here, I'm going to calculate 70% of that, because I want you to understand the concept. I'm not going to involve Excel calculation in it too much. I'm going to use my personal calculator in some of the calculations. So we are going to calculate 70% of January sales will be collected in January. So that will give us 3,500. Then 70% of February sales will also be collected in February. So that one will also give us 4,200. Then moving to March, 70% of the month sales is 8,260. Then that of April, 70% is $11,130. Then for May, 70% of 17,200 is 12,040. So that is about our cash sales. Now the next item now is to look at our credit customers, those who are owing us. The question is saying that the remaining 30% is collected in the following month. That means that 30% of January sales will be collected in February. Likewise, that of February will be collected in March, and that of March will also be collected in April, in that order. So we need to write our credit customers money that we are supposed to receive from them. They are actually our debtors. So 30% of each month's salary will be collected. So in that case, there's no information about December. So it means that in January, no 30% from December will be collected in January, but 30% of January's sales will be collected in February. So in this case, January here, the second part will be dash because there's nothing to collect there. So we move to February, where 30% of January sales will be collected. Yes, so 30% of that sale is 1,500. So as you can see on the screen, the 30% of the previous month's sales has been collected in the current month. So if we take February, 30% of January sales has been collected in February. March to 30% of February sales has been collected in March, in that order. But when you come to May, 30% of May sales will be collected in June. But here our question is restricting us to only May, so we are not considering June. Now, there's no other source of income for this organization. So we have our total receipt, because we have to sum the receipt to know the total amount that will be received in each month. So we have total receipts. So what I'm going to do is to sum the total of the two rows. That's the cash sales and then the money received from our credit customers. So I'm going to use my Excel to do this summation. After getting for the first month, I'll just drag it, then it will calculate for the other months for me. So down here we have our total cash receipt. We just have to underline it carefully. Now after getting the total cash receipt, we then move to total payment, cash payment. So we have we have the cash payment. Cash payments. So under the cash payment, we pay our suppliers, we pay salaries, we pay utility bills, we make all payments, all payments that will be made by the organizations come under the cash payment. So looking at our data, the first thing here is purchases. So we purchase our goods from our suppliers. So let's go to the question and look at how we pay our suppliers. Now, if you look at bullet number 3 here, it says all purchases are on credit and are paid 2 months after the purchase. So it means that the organization buy its inventory on credit and then pay 2 months after the purchases. So now let's go back to our Excel and generate the payment for purchases. So here we have our suppliers. Now in January, the purchases we made in January will be paid for in March, because 2 months after the purchases. So it means that we are not going to pay anything to our suppliers in January, because there is no information about December and there's no information about November purchases. So in this case, January here will be dashed. We will not pay anything to our suppliers. Likewise, February too, we will not pay anything, because we are going to pay 2 months after the purchases. So now when we come to March, the purchases we make in January, we are not going to pay for it in March. So this 4,000 under January, we are going to pay for it in March. So March, the payment to our suppliers is 4,000. Likewise, for February, the purchases here will be paid for in April. And that of March, the purchases for March will also be paid in May. So we have 9,440. So that is how much we will be paying to our suppliers. The next thing to look at is salaries. Salaries for each month is 3,000. So we have salaries 3,000 for each month. So I'll just drag it since it is 3,000 for each of the 5 months. So after getting our salaries, we have taxation. The company paid taxation in February. Sorry, the company will pay for taxation in February and in March. So we have taxation. So in January, no taxation will be paid, and then February they will pay tax of 3,900, and March they will pay tax of 570. So we are done with that one. The next thing in our data is administrative expenses. So administrative expenses for January is 750. That of February is 800, and March is 920. April is 985, and May is 980. Now we have exhausted our data, but let's look at the question and see if there is anything that we need to also include in our cash budget. Now here is the question. Let's continue from bullet number 4. Selling and distribution expenses represent 5% of the month's sales and are paid for in the same month it is incurred. So there's another payment to be made, which is selling and distribution expenses. So coming back to our Excel, we have selling and distribution expenses. So which is 5% of each month's sales, not 5% of each month's cash receipt, but 5% of the sales in our data here. So we are going to calculate 5% of our sales figure. So 5%, you can use your scientific calculator to calculate it. So for January, the 5% is 250. So because I'm using the Excel to calculate it, I'll just drag it. But if you are using paper or a board, you have to be calculating it one by one for each of the 5 months. Yes. So here is our selling and distribution expenses. Now let's continue with the question and look at the other bullets too. Now the 5th bullet says the company which was registered on 26th December 2021 used 12,000 of its issued ordinary shares to acquire office equipment on 31st December 2021. So this particular bullet is testing our understanding of cash budget, because the transaction took place in December, not in January or February, or not between January and May. So we are preparing the cash budget from January to May. So this transaction on 31st December will not come into our cash budget. Hence, we move to the next bullet, which is bullet number 6. The equipment will be written off in 5 years. This means that there will be depreciation on the equipment in 5 years. But like in the first video, I mentioned that depreciation is a non-cash item, so it will not come in the cash budget. So once again, this bullet is testing our understanding of cash budget, so it will not come into our cash budget. Then the last two bullets are talking about the closing balance and then the opening balance. We will come to the last bullet later. Now, after we are done with our cash payment, what we have to do is to get the difference between the payment and then the receipt. So that is what will give us either surplus or, into bracket, deficit. So if the receipt is more than the payment, we have, the first thing we have to do is to get the total of the cash payment. So let's derive the total of the cash payment. I forget to sum the total. So we have to get the total of the cash payment. So I'm going to use my Excel to get a total cash payment. So I'll just drag to calculate the total for each of the 5 months. So I'll underline my total payment. So here is my total payment. Now the next thing is to subtract the total payment from the total receipt, and that is what will give us surplus or deficit. So like I was saying, the surplus means that the receipt is more than the payment, whereas the deficit means that the receipt is less than the payment. So we are going to subtract the payment from the surplus, the payment from the receipt. So we will just drag it, but if you are using calculator, then you have to do it one by one for each of the 5 months. So here we can see that there is deficit in January and February, and whereas March to May have surplus. So to this surplus, we are going to add our opening cash balance. So what is the opening cash balance given in the question? Let's look at the question and see if we can get our opening cash balance. So last but one bullet, it says that the closing cash balance in January was $2,000. The company's minimum cash requirement is $2,000. That's the last bullet. So here's another technicality here. The last but one bullet is supposed to give us the opening balance for January, but it is rather giving us the closing balance. So now we have to use this closing balance to know our opening balance. So let's go to the question. The closing balance for January is $2,000. So in this row we have our opening cash balance, which we don't know yet. Then here we have our closing cash balance, which is being given in the question as 2,000. Our closing cash balance for January is 2,000. But what is the opening cash balance? Now, in cash budget, when you add the opening cash balance to either the surplus or the deficit, that is what will give you the closing cash balance. But in this case, we have our deficit, and then there is nothing like opening balance, but we have our closing balance. So it means that something must be in this bracket, something must be in this cell for opening cash balance in such a way that when we add it to the deficit here, we will have this closing balance. So by looking at it critically, we can all see, or if you want to look at it mathematically, you can see that the opening cash balance will be 2,500, so that the closing cash balance could be 2,000. That is the technicality involved here, because the deficit is negative, hence the opening cash balance being 2,500 plus minus 500 will give you the closing balance of 2,000. So in the first video, I was explaining that the closing balance for each month become the opening balance for the following month. So in this case, the closing balance for January become the opening balance for February. So in February, I'm going to have 2,000. So after getting my 2,000, I have to add this 2,000 to the deficit for February. And by adding that, I have a closing balance of minus 300 cedis. Now, this minus 300 cedis as a closing balance for February become the opening balance for March. So I have minus 300. So I'm going to add that one also to get a closing balance for March, which then become the opening cash balance for April. So I'll sum to get a total. This closing balance for April also become the opening cash balance for May. Yes, so by this, we are done with our cash budget with regard to this particular question. The only thing left is to underline it. Let me look for the double underline to roll over the final answer. Yeah, so this is our cash budget. We are done with the cash budget. So, but if you look at the question, critically, the last bullet says that the company's minimum cash balance is 2,000 or minimum cash requirement. So this one, the company itself sets a rule or set a regulation that if for nothing at all, $2,000 must be left at the end of each month. But when you look at our solution for February, okay, let's take it from January. From January, the closing balance is what? 2,000, which meets the requirement. But that of February is minus 3,000. So this minus 300, sorry, not 3,000, minus 300. This minus 300 will pre-inform management to arrange for loan facility to make sure that there is at least 2,000 cedis in the, $2,000 in the company. So if there is a sub question, they will ask you, what is the total financial requirement of the organization to keep an efficient flow of operations? So for February, for them to have 2,000 cash balance, there is the need to borrow 2,300. They have to go and borrow 2,300. so that when it pays for the deficit of the 300, there will be at least a minimum of 2,000 closing balance. When we move to March, the closing balance for March is 680, and this also does not meet the requirement. So there is the need to also borrow an amount of at least the company must borrow 1,320 to make sure that it meets its requirement of $2,000 minimum balance. So if there is a sub question where you are asked that calculate the company's minimum cash requirement to keep on with smooth operation, that will be the summation of these two figures, giving you 3,620. Yes, so this ends the tutorial on cash budgeting. In case you have a problem somewhere, or there's anything that you need clarification on, or you want to ask a question, feel free and write your question in the comment section, and I will gladly respond in due time. Yes, and if you have any comments to give to, you can give in the comment section. Yes, don't forget to like the video and also subscribe to this page so that other tutorials on other concepts will be notified. Thank you for watching.